and the lower time frames are the same. Whatever happens on the lower time frame happens in the higher time frame. So what does that mean? So as we learned in our previous lesson of ranges, we can say that in the higher time frame, there's also a range created. From this protected low, this liquidity, there is a range. And in your lower time frame as well, there'll be small ranges being created, and you can always follow to take advantage of it. This is what it means by the market is fractal. Whatever happens in the higher time frame happens in the lower time frame as well. But once price mitigates this demand, all of this range becomes invalidated. All of these protected highs in your lower time frame becomes liquidity once price mitigates this demand zone. Remember that? Previously, when you have these small ranges, this is your protected high, this is your liquidity low, protected high, liquidity low, protected high, liquidity low. Once price mitigates a high time frame demand zone, in respective of his range, all of these highs will become liquidity. Same goes with bearish market, talking about fractals. So we have a supply zone created from this protected high to this liquidity low. We have one range being created. And in your lower time frame, you have price trending to the upside after breaking structure. You can obviously take advantage of this movement, and that is what it means by trading against the trend. Basically, your long-term direction is bearish, but you're still buying in this market because you know you can always take advantage of the high time against the trend. But obviously, it's very low probability compared to trading with the trend, obviously. So these are all your small ranges being created on the lower time frame. You can definitely take advantage of this movement in demand over here, aiming for the supply right above here. But you have to realize one thing: once price mitigates this supply, all of this demand will not hold. We'll just bash right through it. And that is why sometimes we have many students always asking us, now, okay, so price has been trending. This is a higher time frame. Price broke structure, mitigate, and came to mitigate your demand. So students always say that now price has broke structure and now it's trending to a downside. In the lower time frame, it's trending to a downside, right? Over here, you have your own ranges being created right over here. You can see your own range, and this is its own high time frame range. So now, when students always ask us, so I place a sell over here, they want the trade went the direction, and right above here, right below here, there's this supply over here. Also broke structure, perfect valid supply. In your lower time frame is a valid supply. So many students will be like, so this is a perfect supply zone. I place a sell, stop loss right above here, take profit right below, wherever, but they get stopped out. Why? Because they're not seeing at the high time frame. They don't have a high time frame bias. Prices already mitigate a high time frame demand zone. So all of these lower time frame supplies are not going to hold. They're just going to be bashed right through, because your high time frame is always stronger than your low time frame. So you should always go to your high time frame, like the daily or weekly or even monthly, and see if price has mitigated any high time frame demand or something. So you always follow the trend. Your high time frame trend is extremely crucial. Me personally, my high time frame is always the 4 hours, but I do go on the daily sometimes to see, because obviously the daily is way stronger than the 4 hours. Okay, now let's take a look at let's take a look at this now. Please pay attention. This is very important. So as we can see, this line is your high time frame and this is your low time frame. All right. So now we have price trending to the downside, broke structure right above here. So this obviously, and sorry, broke structure right above here. And right now price trended bullish and broke this structure. So as we can say price is bullish now because this protected high has been invalidated, as we learned our previous lesson. So right now price is bullish on the high time frame. So this is the demand that broke this structure. Let me just remove this so it isn't confusing. So this demand is the one that broke this structure. So obviously in the long-term direction, we know price is going to trend to the upside. The price is going to come down over here, trend to the upside in the high time frame. Right now, there's a supply over here and price apparently shifted order flow. On your lower time frames, price has done something like this. Invalidated this low, started shifting, bearish. You can see this is what happens right over here. So right now price has been shifting bearish. So as we know, on your high time frame, you have your own range right now, right? Because the market is always fractal. And in your lower time frame as well, you have your own smaller ranges. So you can definitely look for sells, counter trend trades to take price to a downside to mitigate this demand. But remember, price should always invalidate a low first for you to confirm your bias is bearish on the lower time frame. If you didn't validate this low, you're basically still bullish because you never know. You have to always follow the trend on your lower time frame and your higher time frame. So right now, price invalidated this low. Something like this happened as mentioned. Give this. Let's say this is what happened over here. Right now, we have your own ranges and you have supply zones created. You can definitely look for sells. Take all these counter trend trades. It's all valid until price mitigates this demand. So right now, this supply right over here is invalidated. You cannot look for sells because prices already mitigate this high time frame demand. And so this supply and all this supply is not going to hold. All this protected high previously is going to become liquidity right now. Because as we know, price always needs liquidity. So this supply will fail, and that's why many students get stopped out because they are not looking at the high time frame. Many students always ask us why do they get stopped out all the time? And they look for sales, a perfect supply, broke structure. Probably there's inducement as well. They avoided all of the inducement, and they still